Good morning, traders and investors. I'm really sorry that I missed yesterday's show for the Jewish holiday. I heard there was a lot of doom and gloom talk about the Titanic, but I got the life preserver, folks. I would have been throwing out the life preserver to you guys and gals yesterday because we had a support level. So I don't know. I better make this a little bit tighter. We got a lot to cover. Let's see if we can save the Titanic. Mitch, roll the intro.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elkanin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
All right, let's get a look at the index futures. Don't call it a double bottom or triple bottom, but we're there. We are up 48 and a quarter handles, 37.18 and a quarter. How long will it last? The buck 6-day winning streak on the ropes, down 45 cents at 113.56. TLT up 22 cents, 103.90. Not mean much. Crude in the 70 handle. What's going on? I thought this is going like 175. That's up $1.18 at 77.88. Gold trying to get over 1650, up 1070 at 1644.10. Silver, that's up 20 cents, 1868. Good day for Bitcoin, just hanging out. Buy 18, sell 20. Buy 18, sell 20. That's up a G, 75 at 20,255. And the Ethereum futures, they're up $62.50 at 13.89. So do we have the crew together? I guess we're going to be a partial crew today. What do we got going?
I'm here.
Boom. We're here. We're here, Joel. You got to introduce us,
Joel,
remember?
You got a life jacket on. Is
yes.
this for the sinking ship?
Yes. Yes.
You taking water over there?
Just like the market? Titanic analogy.
I know. I gave it yesterday. I think we're going to sit here for the next week, bob up and down a little bit, and then eventually we're going down. But there's going to be another squeeze or two because it can't have it this easy on the shorts. I tweeted it yesterday afternoon. Every rally immediately sold. It has been such an easy time for the shorts, basically just selling the rips. You're selling a rip, you're making money. It's been too easy. We're due for a little bit of a short squeeze. Get a 2-day move, like some follow through, like maybe today. You get the boom, and then they get the little bit of follow through. They're like, oh, we're coming back, and then they pull the rug out from under it again. So this market likes to punish maximum amount of participants. I don't think that changes.
I mean, you say it's easy, for the Bears, but yesterday afternoon after services and lunch, I checked out the market a few times, and not really supposed to do that. But I mean, come on, look at that rally off the open yesterday. 37.30. That wasn't, that wasn't easy for the Bears. I mean, yeah, you're selling into it. Are you going to do it again the second time it comes up to, to 37.30? I mean, it's the rips, and they always come in the morning. Those buy the dippers, they come in the morning, and then it's like 10 o'clock. Like, okay, fun's over.
To me, it's also the algo. The algo's picking up some volume, trading it up and trading it back down. I've been seeing it too many times where the market is liking to wash out both sides. To me, this is the algos targeting retail, putting pressure on the Bears, putting pressures on the Bulls, and both get stopped out a lot of the times in these trades because the trade goes up, the Bears stop out, then the Bulls get in too late, then the moves comes right back down and stops out the Bulls. So what I've been seeing is nothing but a bunch of chop eating up traders, especially with this volatility that we have in the markets.
But go back to your playbook and how do you play chop? The same way we've been playing it the entire year. No matter what, my investment portfolio, it's been a crappy year. I'm down in my long-term portfolio. Stocks are down. But you know what? The trading portfolio has been profitable every single month this year. This has been a little bit of a tougher month, but it's still significantly profitable. It's been, a very good trading year, and you have to go to your playbooks. 2020 momentum year. You're jumping on the bandwagon. This has got a trend. This is moving. This has been the year of no trend to a certain extent. I mean, the overall trend is still down there, but I mean, just selling rips and buying dips. That's the playbook for when you got this chop, and that's what we have here right now. So you've got to change your strategies for your market environment. It's the only way. I mean, that's the thing about me trading professionally for 23 years. I've seen a lot of different markets. There's always going to be something I haven't seen before, but 90% of it I've seen before. So I go to that playbook. That playbook right now is just fading moves. So like to your point, everybody's getting stopped out because these momentum traders are all like, oh yeah, here we go. Let's get on. Oh no, here we don't go. Exactly. But if you're just turning around and taking the other side, the contrarian view, some of these trades aren't even having that much heat. So it's all, about just being on the right side of the trade. And right now, fade and moves is still working.
Yeah, and I am so glad that because of the construction we're doing in the house, I've been working from the second floor.
What are you doing in the house? Curious. What's going on?
Yeah, that flood I had over a year ago. Yeah, where it cracked, went through the foundation. Of course, they don't, insurance doesn't cover that. So I had to come out and just all on two sides of the basement, man. They had to just jackhammer it out and put a new drainage pipe into my sump pump. So after we blew up the floor and cut up the walls, I've had him scheduled since May. We're getting around to it. So I'm just having to recarpet and paint and everything. And then since we got the guy here, we're just touching some things upstairs. Nothing major like you, Dennis, but the price has increased. But just real quickly, chatting everybody, remind me if water comes that I put my life jacket, I hung it back here. So if I start to take water, then I found the blue one too. Lisa had a red one and a pink one, and I didn't want to bring those. So I'm going to keep my life jacket there because when we take out 3660, the quad bottom, man, then I'm going to have to put that on.
Is that a Voyage life jacket? Because it looks like they got themselves a life jacket today. It looks like bankrupt crypto lender Voyage is to sell assets to FTX for $1.4 billion. FTX bid was valued at roughly 1.4. The company said in a statement late Monday, Voyager had hinted towards this possible transaction for its customers over to FTX.
Is this why Bitcoin is up?
It could be. It could be.
I was just wondering why Bitcoin was
I would say that at least if you're looking for the catalyst of why, this would probably fall into that. But another reason I'll be looking at least is if Bitcoin's up, will the market follow? So,
and there's a good point there. The Bitcoin rally here to a certain extent, and it is positively correlated with the overall NASDAQ here. It has been for a while. Bitcoin is holding on support too. As much as the S&P held its support, the QQQ has held its support from June. Exact same thing, exact same story in Bitcoin. You trade NASDAQ, you trade in Bitcoin. The June lows in Bitcoin are right there trying to hold. I keep thinking it's going to take it out, but take out those lows, but it hasn't yet. Now we bounce out of here again. So support is support until it's broken. So that's the good news for the bulls and the Bitcoin.
Also, good news for the people that are trying to figure out what happened to their money at Voyager, right? Well, they're going to get an answer finally. Just stay tuned. I'm sure
they're going to get some of this back.
Well, they might get some cents on the dollar. Let's call it like that. We're going to have to figure it out the exacts, but
that's not traded anymore, right?
No.
Now, do you know? And I think I saw this on a tweet. You know who's working on the committee to get some of the money back?
Our good old friend.
Yeah. Did you see that, Dennis?
No, yeah,
Jason Raznick put in some work.
Jason's in there. Is he?
Yeah, he's fighting.
I think so.
He's trying to get some of his pennies back. Can't blame him.
Well, get involved. Yeah, Jason's there. They're fighting for him and fighting for the other customer. Good job, Jason.
Yeah, definitely.
We're gonna get Jason back on this show one day, but Jason's a busy boy.
Yeah, well, especially once he gets through this Voyager situation, I'll make sure that we get him on to kind of talk about what happened and what he learned from that and how we can move forward.
Sure.
All right, let's get towards the next kind of headline that's really catching some tape action is the Nord Stream kind of getting some damage. And A lot of people are kind of getting a little bit, suspicion here. Germany suspects that the damage to Nord Stream pipeline is a result of sabotage. What happened here was earlier on Tuesday, 3 offshore lines of Nord Stream gas pipeline sustained unprecedented damage in one day. So at first, it was Nord Stream 2. That wasn't that concerning because, as we know, Nord Stream 2 really hasn't been kind of running gas, right? Natural gas consistently. Hasn't been online because of what happened with Russia. They shut it down right before they got into their war with Ukraine. And then now what's going on is that you're getting 2 leaks on Nord Stream 1. That, to me, is more concerning than Nord Stream 2 because, of course, this is the pipeline that we're expecting to come back online at some point, right? Well, of course, these damages are not going to help them get it back online. And now Germany's suspecting that maybe it was sabotage that came into play here.
I don't know anything about any of that. Don't need to know anything about any of that because we can just look at UNG pricing. And
there you go.
And it's been coming down here. I mean, we could say we were worried about, supply. You can worry about all those things.
Yep.
You can say, oh, you're coming into seasonality. And we've been straight down since September started.
I
so
think
it's a risk asset. Everything is trading as risk assets right now. So, commodities, we've been moving, like oil has been moving kind of same direction as the overall S&P. We had a little bit of a negative correlation there for a while. That has broken down. Now it's like recession. So everything's just moving together. It's like, oh, oil gets a relief pop today and the stocks pop with it. So, all of a sudden, that negative correlation we were seeing a few weeks ago has turned into a positive correlation. A stock is a stock right now. Cats and dogs living together in harmony. I mean, all this stuff is just moving together. Understanding the relationships, the current relationships. You don't have to know historical, really. What is currently moving with each other is the key to trading success. And I keep saying that with myself. People say, what are you, a technical trader? What do you use? Fundamentals? I don't use any of that. I use relationships. I look at price on the charts to see what is moving with each other. You can clearly see that obviously natural gas has just clearly been moving with all other risk assets as well here now. So that will change. Market starts rallying. Probably natural gas starts to get a bid here too. You do have seasonality working in your favor. As volatility starts to come back in, relationships will start to break down. But when the VIX is over 30, this is a rule. Write this down. When the VIX is over 30, everything starts moving together. That's just always been the way. We traded lots of VIX 30 markets in the past. It means stuff moves together.
I mean, we've just been talking about this, and this is the same thing. And, I got some pushback on it. The crude, that $130 scenario that everyone and their brother talked about,
but this
happening.
is a different situation, though, than crude. I think, crude is a different situation than natural gas.
Yeah,
we're trying to just say it's all moving together.
They're both going down. I mean,
I think natural gas, though, catalysts point towards the upside. I understand the oil recession.
But you said that
worries.
at 30, Mitch. We're at 24 here now.
I mean, we've gone up and down. I mean, we went from 20
down.
back
let's
up to 34.
Let's move on.
We've gone down. No, it's okay. We
went from 20 to 34.
We have good calls, bad calls on this show.
Yep.
Mitch has been on the wrong side of the natural gas trade. We'll say that. Mitch makes lots of good calls here too.
What happened there is a lot of it was kind of more the buy the rumor into the Nord Stream pipeline shutdown. And then when it actually shut down, it pulled back. It was to sell the news. So it could be now buy the rumor into winter as they expect to, of course, get that heightened crisis going.
Those are tough scenarios. I mean, the prices have gone down. What do we have any earnings to discuss?
If we start to move around, I'm just saying, like if we start to move around the S&Ps, if we start to come back up, you'll probably see natural gas and commodities. Right now, we're just all linked together. So all the little individual stories aren't really mattering. That's why you're seeing natural gas not really move much this morning here, because the individual stories don't matter when VIX goes over 30. You got to understand that relationship. I'm talking in the chat there. When the VIX is over 30, I want to say it again. I just said it 2 minutes ago. I want to say it again because people get caught up on all the individual stories, and they're like, why is my story not working? Mitch's story may have worked well if we didn't have an overall market sell-off. But the overall market sell-off on everything is probably what put a hole in that story. So when the VIX goes over 30, it kills individual stories. It kills them. So then everything just moves together as risk assets. It's cash versus stocks. So I think Mitch made very good points. And I think in normalized markets, natural gas actually could have moved higher. But it just didn't work out because the overall market just started to get too much selling, too much stock is a stock is a stock. and that's what's brought down natural gas stocks. But to his point, if we start to get back and get, volatility coming back in, those individual stories will start mattering again. So maybe there will be an opportunity to play natural gas stocks, and we're still getting colder out.
All right, let's keep going. Let's get into, do you want to do the triple bottom on June lows talk, Joel?
Yeah,
Before we get into the micro?
Man, this VIX is giving me a hard time. There it is. Boom, just showing you the VIX.
Back up over 30 here again. So
yeah, exactly.
Just
I got it
sneaking
right
our
there.
head over it. We could slow
Yeah.
down. We start to get some market, stability here. Maybe we start to get,
down.
back down to 25, 24, and then individual stock stories will start to matter again. But I mean, I got food stocks up this morning, Joel. I got consumer staple stocks up. I got utility stocks up. Everything. Yesterday, they just sold everything, especially in the last, 20 minutes. Today, they're just buying everything this morning. So it's just, it's so clear when you watch like the 500 companies and you go to your filter. Like I said 2 days ago, I had 1,000 stocks. I don't know if you were on the show that day, Joel, but 1,000 stocks I was monitoring, and there was literally like 4 stocks trading green out of 1,000.
Wow.
I think that was like Thursday or Friday, or it was one day last week. Today it's the same thing. There's 1,000
You weren't here
stocks.
it had to be
I have
earlier.
1,000 stocks that I'm running, like of the major companies, and in my down filter, stocks that are trading down here this morning, there's 7 out of 1,000. It's crazy. And this is, and you can look, you can see some ticks, but this goes on bids and offers. So if it's ticked down, it doesn't matter. It's got to be offered down. So these stocks that are offered down, I see CSX this morning is offered down. That's one of them. Philip Morris is offered down, but we're next dividend, so it's not even offered down. NSC, so we're seeing the rails. I'm seeing 2 rails in there. I'm seeing Deutsche Bank offered down. But same thing. It's just, everything moving together. Cats and dogs living together. When the VIX gets over 30, they all move together.
I just want to illustrate what I talked about earlier. June, it was a June expiration where you came down, and that was pretty. That was easy turn. We ain't getting no easy turn off the September expiration. That low definitely did not hold. I believe that was back up in the 3,700 handle. I believe it was 3743.50. So there you go. You see the lows from June. Now this green bar that we have going after the 5-day winning streak, which was actually we were down actually 7 out of 8 days, 1 intermittent up day. But there you go. I mean, it's clear. When you have these kind of formats, it's there. You can lead on it. Now we're 60, 70 handles away. Of course, we know the way this market can move. Will the Bills do anything but will they step up from that level? Because I was looking at this yesterday near the close, and I almost tweeted out like, "Congratulations to the Bulls for for standing, for stepping up at 36.60 for so long. Get out of the way, you're going to get run over." And and I'm like, no, and don't tweet on the holiday. You're gonna. Because I was all prepared. I mean, had to sell stops in there last night to go short through that area. I mean,
but it's holding.
I know.
It's
now
still
the right
holding.
thing to do would have been go long at that area and have a low risk long, but it just seemed inevitable that we were going through it. But
I keep thinking the same thing. If you hang out here down here long enough, eventually you probably do go through it. But we got to bounce out of here today. If the Bulls want, if the Bulls really can grab a hold of this market and say stocks are cheap enough now that everything bad is priced in, they want to grab it, they got to run with this market. We need to get up to like 375 here today on SPY, get up here, hold it, and then build on that. Because right now they held support. Very good stand. You can see that chart clearly. Very good stand by the Bulls to hold that support. And support is support until it's broken. But I just got the fear that if we stay down here long enough, eventually they do break it.
All right.
Dennis, you got to get, you got bust duty.
Yeah, I got to hop. So anyway, COVID striking all through this household here now. Not the kids. The kids have been good, but my wife has COVID now. I got to go put the kids on the school bus, and I will be back.
You sound better than you did. Yeah, I heard a little bit of you yesterday. You did.
Yeah,
it's
slow and steady. I'm like 75%. I'm day 9 here now, so I'm starting to come. This is the 9th day, so it's got to start getting better here soon, Joel.
All right, see you in a couple seconds, Dennis. All right, I'll put him in the background. He'll come back on. Put his camera when he's ready. Let's go towards Netflix's news today.
What's going on with Netflix?
You're gonna think this one's a little bit interesting. So Netflix will be opening an internal game studio in Finland. The company announced on Monday. Netflix Games, which started in November 2021, has purchased 3 studios. Netflix bought Finland-based Next Games for about 72 million, and Netflix has a cache of over 20 mobile games available for download for subscribers, and the company plans to have 50 by year's end. Now, the fun part is none of these subscribers that Netflix has really are playing these games. I think it was kind of less than 1.5% of subscribers are actually playing these games. So I don't know if this is the best use of their money, but they're trying anything and everything to get some growth back.
Yeah, you're getting a little pop on this. You started to come down to support yesterday at 220, just under the 220 area. Now you're up again, but the couple things on this. Had Michael Pachter on at the close on Thursday, and we love Michael Pachter. He's bullish. He's got a 280 price target, and I think if Netflix is going to come out of and maybe never be a $700 stock again, is if they could figure out this ad revenue and monetize it. And I know absolutely nothing about ad revenue and advertising and the dollars, but supposedly they're having less time for commercials, but they're charging more money. If that model works, then yeah, maybe they'll hit the price target at 280. I would just keep an eye on, and there's not an exact number there, but you got 2 monthly highs at 250.49 and 251.89. Let's just call it 250 for fun. I mean, once it clears that, then there's considerable room on the upside. Until you could really clear that 250, we're $25 away from it. I think the Bears are still in control of Netflix.
All right, next news headline is going to be on Hertz and BP Pulse. So Hertz, the oil giant EV charging unit, will install thousands of chargers across Hertz sites across the U.S. So the chargers will support Hertz's plan to add hundreds of thousands of EVs to its fleet in the next couple of years. Some of these chargers will be open to the public. And I thought this was interesting too, that I'll tie into here. I saw a stat out of the UK that was interesting, is that electric car drivers in the UK using public rapid chargers on their pay-as-you-go tariff have risen by 42% since May. So if you take a look at it compared to a gas-powered vehicle, it's just slightly less expensive to charge the vehicle than it is just put some gas in the vehicle. So it's showing me that the prices are going so high that it really isn't more efficient to be in an EV, at least at these prices.
So I see the Hertz chart. Is there a company related to?
So what it is that BP Pulse, so it's BP, and they have their own EV charging unit, like their own side. So it'd be BP, and then it's a part of their business. They have an EV charging unit. So they made a deal with Hertz to get all their charging units inside of Hertz.
You sometimes you need to take a step back from the markets and think about things. And, we've all been just, mesmerized by the rally in the utilities. It's actually come off, and we talk about it. Yeah. We talk about it as a safe haven and whatnot, right? People are hiding out. But, if we're looking forward, to 5, 10, 15, 20, 30, 40, 50, 60 years, and we're more and more electrical vehicles and more solar, I mean, you're going to be some upgrades to the grid, baby, right? And that's going to be utility companies. So I think that's besides it being a safe haven, there is a transition going on. You could deny it or not, but there is a transition going toward EVs for several different reasons. And you get in, you got to buy extension cords. I mean, you need the supplies. So that's for the hidden bid on the XLU.
One thing that I'll say before you get away from XLU, look at that monthly chart. Look at XLU's monthly chart. It's been in a channel for since 2020. And I think it's right now on the bottom of that monthly channel. Let's see if we get a bounce, right?
Oh,
I
so
mean, it's held that channel for so long. Why not look for maybe a bounce there?
So you're going off the 20 low?
Yeah. Well, not the one right next to it. So
Okay.
the
Yeah. Okay.
April 20
Okay.
low, and then you
Yeah.
just
Because
draw that up, and you can see how it just
I'm trying.
stays in there. If not, I mean, I could share my
I
charts
got
with
it
anything.
close enough.
There
People
you
know
go.
it.
Yeah, no, I mean, that's just to kind of show a representation
Yeah.
there.
It's
And it's
coming
held
down
it
there.
really well.
Yeah.
So
Yep.
we'll see if we get a bounce here. I've been looking to see if we get a bounce in these utilities in the next couple of days. Doesn't mean it's going to be today, but could potentially happen, right? I mean, especially if we get a day where, we get this rip and rally, right? Everything starts kind of, dead cat bouncing up. Well, I'll look at utilities, especially if they're still in this trend.
Yeah. Okay. Let's just look at them. Duke is Duke. Bad day yesterday. Real bad day yesterday. DTE, good old Detroit Addict. Yeah, they've been coming off. That made a new all-time high. I mean, it's they're pulling in. So it's been a buy the dip so far. Even with rising interest rates, everything is going on. It's been the trend to buy the dip in the utilities. We'll just have to see if that continues.
All right, now let's go to Splunk. They did kind of a pre-announcement here, also saying that CFO Jason Childs to resign and reiterating some guidance here, seeing Q3 revenue at 835 million on the low end, 855 million on the high end versus 846.15 estimate. They do see full year 23 revenue at 3.35 billion versus 3.4 billion. And that was the estimate, 3.4. So a little bit on the lower end. They brought it a little down, but kind of reiterating the guidance right in line.
You tell me what you like about this chart, Mitch. I mean, what do you like about it?
I'll tell you right now, software is not where I want to be. Let's just say that. I mean, at the end of the day, I've heard people talk about this, and I feel like it's the truth, is that in the pandemic, software grew so at a rapid rate and such an appreciation because there were so many people at home that were getting these softwares, right? Well, now majority of us are going back to the office.
Yep.
Yes, there's some hybrid. Yes, there's some people working at home, but there's not as many people at home. So the software and that kind of technology, I think, is going to take a hit. And of course, as inflation keeps high and companies look to cut costs, where is the number one way to kind of cut some costs? Well, I'll tell you, it's an easy way is looking at like an Asana and being like, well, I don't need 500 users. Maybe can we cut it to 200 users? Simple outlook here on Splunk also.
Okay,
right?
so pair of lows, new low of the move yesterday, 79.06, 79.47, up on 1,181 shares. So, I mean, first things first, what you want if you're a bull of Splunk here is you want to see it take out yesterday's high, right? 83.24, right? That's what it has to do. If you're still bearish and you're saying, oh, I hope it comes in back at 79, I want to bring this in at 79.07 and a half. You say, well, we'll see what happens at the close. The close was down there at 79.38. So just the way the market is shaping up right now and the way this looks technically, that close, which was low close of the year, which was the lowest close we've had below the COVID low close. This is the lowest close you've had since February of 2018. When it ended the month at 93.20. So there's a technical look at Splunk. And how do you like when you leave the company and your stock goes up? That probably doesn't make you feel good.
That doesn't make you feel good, Jason Childs. Let's go into the next one here. Let's do some upgrades and downgrades. Tuesday's that day where, a lot of the banks start taking their shots. So let's get into that. You got Keurig and Dr. Pepper. Goldman Sachs downgrading the stock to neutral from a buy rating and sees increased risk to Keurig's margins and commodity inflation, especially related to coffee, remains elevated.
Boy,
expensive coffee.
What? Well, first of all, out of all the sodas, I'd never drink the same one same time, right? Every time I go, I like I like the Dr. Brown's Black Cherry, but you don't see that everywhere. I like Dr. Pepper. It has the taste, but I'll get Dr. Pepper. I'll get Diet Coke. I'll try. But I like Dr. Pepper. This is one of the boringest charts that I think I've ever seen on the pre-market prep show. I mean, this thing doesn't go anywhere. I look at this thing. It's been. Why doesn't this move? I mean, it almost looks like it's like in a merger arbitrage or something. I'm not going to
Yeah.
get all afraid what Goldman said. I'll just look at this recent low here at 36.62. Better hold that or, work in the lower 36 handle, but really a boring chart.
I'd be interested to know how many people actually make coffee anymore versus using those little Keurig cups, right? And those
Costco
K-cups.
coffee. I've told you this 100 times.
Oh, trust me, I'm not in that party, but I would love to hear it. Chat, if you guys use the K-cups, put a 1. And if you make some standard coffee, put a 2. I would love to see that in the chat. So definitely fill it on in there. Let's do one more upgrade and downgrade before we get into our guest today. Excited to get into Scott Brown, CMT, coming up next. Let's do one last one. Let's do the Lucid. So Cantor Fitzgerald coming in here and giving an initiated coverage with overweight rating. The firm said Lucid's luxury and premium vehicles provide greater efficiency, longer range, faster charging, and more space relative to its peers.
Well, this is a nice move for they're buying the dip. This is not a bad looking move, right? First things first, we are right at yesterday's high. So boom, show me that you get a bid at yesterday's high, and then we'll move on. We'll move on to 1558 off this upgrade. I don't know. Had a bad close that day. But above this 1465, establish a bit of that. The next thing I see is 1558, and just another trick. I think I've showed you guys and gals this before. Look at that closing price on the 21st, like 1556. I cannot remember how the market opened on the 22nd, but you opened up and then you tested that close. But if like you to get a sell off at the close and this thing started going back down to 1545, ended up having a bad day. So that's a look at LCID. They're trying to buy the dip there.
Hey, it looks like our crowd is more of a coffee maker than those, easy K cups. So at least a shout out to you guys for making some good old coffee. And I'm a Bustelo fan, but yeah, Joel
What's
likes that
Bustelo?
Costco. It's a Cuban. It's a Cuban coffee. It's an espresso.
Is that expensive?
It's actually really cheap, Joel, and that's why I like it, because it's really decent coffee for a really cheap price. So I mean,
I'll have to bring up I'm sure everyone knows what my Costco, that big Colombian,
hey,
brown
you can't
can.
go wrong. Costco has some good coffee.
If you had my coffee, I mean, what hair you have would be standing on end because I make it strong. 4 scoops and then just 6 cups of water. So make it very strong. Do we want to sneak one more in here?
Yeah, well, I'll just wrap up Lucid. One thing I'd say about Lucid is just watch out, because I think in their next earnings report, you're going to really hear more and more concerns of supply. Because at the end of the day, if you look at all the automakers, when Ford and GM struggle, these smaller ones are going to struggle, that much more, I mean, at the end of the day. And then we just got from yesterday, I know it's a China auto, but LI also given some supply constraint concerns and saying that they would deliver less vehicles because of those supply constraints. So it seems like to me, they're still worried here. And also the price on these Lucid vehicles keep going up and up and up. Eventually, they're going to probably be higher than price than a lot of the kind of the alternatives like the Tesla S, right? And so I think in the long run, I think Lucid has an upward battle to keep fighting, but that's just the way I feel. I mean, I called it from 18 to 14. So I would say, watch out, because I think eventually this one's a $10 stock, but that's just the way I've been calling Lucid for a while. We'll see what happens there. Let's go towards our guest now.
Yeah, I see Scott Brown lurking in the background there, CMT for beatthebench.com. And Scott, how you doing this morning?
Hey, I'm doing great, guys. Thanks so much for having me.
Yeah, excited to have you on.
Yeah, so you come on courtesy of Ryan Dietrich, because Ryan was scheduled to come on today, and Ryan's moving, and things weren't going so swimmingly, and he was supposed to have his moving truck on last Thursday, but it showed up, I think yesterday or today, and he's like, I can't do the show. He Twittered me, he emailed me when I was at services. He goes, but I got this great guy to bring on, Scott Brown, beat the bench. So before we go, you started on what you've done and your site and everything. Give us a good Ryan story.
Give you a good Ryan story. Oh, you put me on the spot. I mean, Ryan's a great guy. I worked with him for a number of years. I'll just say that Ryan is the absolute master when it comes to sentiment in the crowds. That guy, spidey senses, man. Like, he puts out all the great data in the charts, but like, it's an intuition thing. So pay attention to Ryan. Everybody follow Ryan. I appreciate him giving me the opportunity to be here this morning with you.
So there's no funny story, no joke we could play on him or something. Nothing. You want to think it over? Okay,
we'll have to think it over, guys.
Okay. So what did you do at LPL?
Yeah, so for the last several years, I was the technical market strategist there. So I worked really closely with Ryan, who's obviously a technician as well, and was the chief market strategist there. But my focus has always been really exclusively on the technicals, and that's what I'm doing at Beat the Bench. It's investment strategy, specifically for investment advisors. We do 3 reports every single week, kind of a macro asset allocation one, a deep dive in an individual equity report called Stocks, the Good, the Bad, and the Ugly, but it's really geared towards helping financial advisors beat that benchmark for their clients and provide, superior results. Again, financial advisors are really the target market, but hopefully we've got something for anybody who's managing money or might be a professional trader or something like that.
Time horizon for these. I mean, is it all different kind of time horizons?
We'll give short-term setups, but I say my general time horizon is more weeks and months. I want to be in trades usually at least a couple weeks.
Yeah, less competition, right? You're not fighting with the HFTs and the shorter term traders and executions, like for a lot of stuff that that Dennis does. He that execution. He sees the news, he misses the execution. Does he chase or not? But what you're doing is, hey, if you have bigger targets, bigger time frames, maybe you have to take a little bit more risk. So so you draw out all the fundamentals. You don't care about earnings and the war in Ukraine, and you don't care about any of that stuff.
I don't. The price wraps it up. All that is incorporated immediately. So I'm not one of those that it doesn't matter. It's just the only way to actually make money off that, I think, is by looking at the charts.
Charts don't lie. That's what I say.
Yeah, price don't lie. Price don't lie. Okay,
right.
So you see at the bottom of the screen there,
Yep.
and you can share. There's a share button. Have you been playing with it at all? So make sure you share the right screen, man. I don't, want to make sure you show the right thing.
Oh,
so
we're gonna get some Scott charts.
Yeah, we're gonna get some Scott Brown charts.
Oh,
Scott
I'm
Brown
excited about
CMT.
this. Yeah, if you guys, for our audience that isn't the educated on the CMT, of course, that's Chartered Market Technician. Just for you guys, it's what I'm studying for. That's what I'm getting after. Scott has had it since 2019, right?
Correct. Yeah. Going on about 3 or 4 years with it. It's a great thing. I really think it's important to kind of know those fundamentals. I was interested in technicals well before really got into the actual CMT program. Thought I had a good knowledge base, but it's really important to kind of cover your bases, and I think is a great asset to anybody managing money.
All right, let's get to those Scott charts. Let's go into it.
All right. Can you see the right full screen?
Yeah.
Yes, sir.
Gotcha. All right. So like I said, I try and keep it high level first. I'm a top-down asset allocation strategist. We got some individual equities, but I think it's really important, no matter how short-term your trading is, to know the environment that you're in. And I think this chart kind of helps us answer that question. It's the S&P 500 up top. We know that we're retesting those June lows really as we speak, but these are the percent of stocks in the S&P 500 up above their 20-day moving average there in black, up above their 50-day moving average in red, and up above their longer-term 200-day moving average in blue. And all of these have basically been in downtrends for the majority of the year. And the percent up above the 200-day moving average, to me, the most important, is down there at year-to-date lows, just 10.9% of stocks in the S&P 500 up above their 200-day moving average. So what this tells me, first and foremost, is you're going to have to be very, very selective on the long side. And really, this is an environment to me to be on the short side or to be playing defense if you're a long only investor, because the opportunities, I mean, we're pretty washed out there, just 2% of stocks up above their 20-day moving average. So like, you've got the ingredients for a bounce for sure, but your time horizon kind of has to be short to me. And so I think it's important to understand that until we fix that blue line and can show some signs that we've actually really turned a corner, I think you just have to be very, very selective on the long side. And you just got to recognize that most charts are going to be either stay away or, again, maybe opportunities on the short side. And we got a couple of those to show you today.
Yeah, the market breadth isn't the best right now at the end of the day, and until we can get that turned around, it just seems like everyone wants it to be the bull market back again, but that line shows me something else. So a 200-day is an easy way to just look at the stocks, and then there's certain ones that are still above in bullish trends. That's why I've been trying to stick with those kind of stocks if I'm playing to the upside. But it's been tough to find a stock that has that 200-day below it and still kind of in an uptrend, right? I mean, that's just not what you normally see.
Yeah, and I saw you were talking just before I hopped on about some of the things in like consumer staples, like Dr. Pepper. I mean, that group it looks ready to break out in relative terms, but it also looks like, if you look at the XLP ETF, we go below 68, like that's a really big level and a big absolute breakdown. I mean, the worst environment you can really have is where the best performing stocks are breaking down, and they're the defensive names too. So, I mean, it's something to watch for sure, because bigger picture, it's a really tough environment.
Can you just quantify that for me? You said break down below 68. Now, intraday on a closing, I think this is the hardest thing to define in your technical analysis, like a break of 68. Well, is that multiple closes under 68? I just kind of make up my own rule, and it's like you got to give me 2 or 3 closes below a level. What's your rule for that, Scott?
I'm a little bit closer to a price is a price camp. I'll
Okay.
respect it. I'll respect it if you pop back above, then all bets are off. But I typically go with that's the breakdown. This is a short, and if it pops back above, great, you get out. But I'm more of a price is a price thing.
Less
Sometimes
complicated.
you wait for those closes, and you're at 65 or you're at 63.
That's true. And it does have a tendency of going back and forth there. Now, let's continue going. Is there any sectors or kind of actual picks that you like right now? There we go. Getting into the nitty gritty. Let's look a look. We've got commodities here.
Yeah, so this is DBC, the Invesco DB Commodity Index ETF. And I think it's really interesting. Back to that asset allocation strategy, talk about business cycles. What happens toward the end of a business cycle, the classic 6 stages of Pring-Turner business cycle analysis. Well, 2021 is stage 4. It was bonds going down, stocks and commodities going up. First half of this year is stage 5. It's stocks and bonds going down together, but commodities still going up. Around June or so, it really looks like we entered what's the 6th and final stage, which is all 3 of them going down. Commodities have been really the only place to hide for the first half of the year. I think that trade is over. We've got a pretty clear head and shoulders pattern breakdown in the past couple of days on Friday with about a 3.5% decline for DBC. And that break of the neckline is really it. That's your stop loss if you want to get short. But that measured target is about $6 more of downside. And I think that, that $6 is 18, but I think that range back there from the spring of 2021 looks like where there's probably some support. But again, you talk about this cycle's been really, really classic. Everything that you would expect to kind of play out by the textbook has played out. And so it seems like commodities being the last to go and this ETF continuing to fall could really fit in well to that story.
Well, Scott, you don't have me feeling bullish here.
Sorry, we'll try and we got at least one halfway.
Yeah, you got one bullish start there. I mean, come on, you're gonna make me put my life preserver back on here. What do you got? You got anything that's looking good?
Let me show you one more short, and we'll show you the good one. At least trying to get on. But I think this is another pretty attractive
interesting
short
one.
setup within the Dow. We got it titled Shoe Dog of the Dow. It is, of course, Nike. Nike's breaking below just the
Oh,
big
yeah.
picture support range, the
Yeah.
pre-COVID highs. If you're going to be short, shorting stocks is hard. We want to short not just things that are going down in absolute terms. We want to be short the absolute weakest names in this market. And Nike's down there at 52-week relative lows. I believe it's the third worst performing Dow stock year to date. But that 100 to 105 range, if you're below that, I think the only bet here is really Nike going lower.
Scott, I got a
Well,
question for you. So, yeah, let me hop in here. I mean, so you're dealing with money managers and advisors and stuff like that. They short stocks. They get clients to short stocks. They have margins accounts to short stocks, or do they do puts? Because it's a dirty word. How do you get them to do that?
Yeah, I mean, I think you can be short. I think you can buy puts. I think you also just, even if the message is just don't own this stock, maybe you're a long
Okay,
only,
that's
but
yeah.
you're thinking Nike is a big blue chip. I mean, you've gone from 180 to 96 in the past 8 months or so. So I mean, I think there's a lot of different ways to kind of play it. But I do think a trader could be short this name, and I think we got some traders that subscribe as well.
Yeah, I think that's important, especially right now going into kind of 2023 is trying to decipher high quality names, right? And I think that even if you can know which one of the high quality kind of more blue chip stocks are not the ones you want to be in, well, that can start helping narrow down that list.
Exactly. I mean, if you're going to be on the long side, you at least want to be focusing on relative strength, stocks that are at least outperforming or going down less. That most certainly isn't Nike right now.
Yeah, and I switched to Hoka's. That made by Deckers. I wore Nikes for years, but at least I got
No
a nice pair.
Crocs?
No, I don't have Crocs, but at least I got a nice pair of Asics. But and also I am and this is really rare for me, but I'm not buying any new Michigan football gear,
Whoa.
or any kind of Michigan athletic gear that has Jumpman on it.
You don't like the Jumpman?
No.
Not a
No.
Jumpman fan.
Do you know why? Do you know why?
Why?
Do you know where we're based? Do you know where this show is based? You're probably too young. How old are you? Are you like 25, 26, 27?
No, wait. Where are y'all based?
Detroit.
Detroit, the big D.
The bad boys. You don't remember the battles?
Boys.
How old are you, Scott?
Yeah. I'm 31,
you don't remember the bad
I've seen
boys.
the clips, but
Mitch, do you remember the bad boys?
Yeah, I remember, and we've interviewed a couple of bad boys before, part of the cannabis side, and I think at the end of the day, I mean, you can't go wrong. Swingman. I'm sorry, Joel, but it's Jordan.
Nah,
Jordan.
I can't do it, and my girl's not to buy it for me. Okay, we've been on the line with Scott Brown. He's brought us courtesy of Ryan Dietrich. He has beat the bench. He's out there. Scott, great first time interview here. We gave you a really hard time and you held up well. But if you want to come back on again, you're gonna have to have a better story about Ryan. Okay.
All right, I'll make sure I'll come up with a good one, or I'll make one happen in the meantime.
And because I'm going to throw the stick at him next time, and I'm going to ask him for a good story about you. So you might regret not spilling the beans. But Scott Brown,
that's a good point.
Beat the bench. Thank you, Scott.
All right. Thank you for joining us today, Scott. All right. There you guys. I threw up the link there for you guys. If you guys want to check out beatthebench.com, go ahead and check that out. You guys can just click on the link. And also follow Scott Brown on Twitter. He's a really good follow. You guys know that I don't just follow anybody. And so check that on out, guys. I definitely stay up with Scott Brown. And looks like we got Dennis back.
No, I thought he got on the bus.
I did. I actually,
he did.
Yeah.
The bus driver was telling
That's
him, is it a buy the dip or sell the rip?
I've never done that before because I'm always on the radio show with you guys. I never miss a day. So here I am. Look at this.
The bus driver was like, who's this guy? Do you guys want me to call the cops?
Didn't even know there was a dad.
Have you ever spoke at the kids' classes? And done any kind of presentations?
No stock tips for the young ones?
Dennis
asked me.
I got, you know what? I got one that I did when Dana was in the 5th grade. And it was like their school thing was Waldo. And it was Waldo, mathematics, and the markets. I think I still have it. I'll send it to you. I'll have to, it's, you
I
might
like.
have
Oh yeah,
to.
I like that. You can put that together. I don't have to put anything together.
Yeah,
Just take Joel's
exactly.
stuff.
All right.
Copy off Joel again.
All right, let's go towards another rating and upgrades. There's a lot out today. Let's go towards the
Did
Hyatt
they happen
hotels.
all of a sudden? I didn't see any.
Yeah, I've been going through some. You
got a
got
few now.
Keurig, you got Lucid. We already touched. Now we're going to Hyatt hotels. Let's take a look at the
Of course,
Hyatt.
yeah, of course, because I'm short the stock. That's how it works.
Yeah, of course. That's how we do it to you, Dennis.
Yeah, I know. This is what they do. They look at my portfolio. They break into my account, look at my portfolio. Dennis is short Hyatt. We better upgrade that on him.
Don't talk to Evercore then, because it's Evercore ISI Group upgrading Hyatt hotels to outperform, announcing a $100 price target.
I'm sure it's a stock. That's all I'll say.
It's well, Dennis, at least those couple days you were sick, at least you didn't get jammed with any bad overnight positions. I mean, that's one positive.
That's true. Actually, the only days I didn't get jammed with bad when it was the days I didn't have any overnight positions. This is what happens, though. I mean, I've said this. When you got 50 or 100 overnight positions, you're going to get one working your way. You're going to get another one not working your way. You're going to maybe sometimes get a couple working your way and sometimes a couple not working your way. You just got to work out of those as best you can. So this is an overnight position. I will cover it today. I will work out of it as best as I can.
Oh boy. I mean, intraday, you got a little pop here. There's really no levels. What was the close on the 22nd? I'll keep an eye on that. 8107. Some people are getting their money back after the last 3 days. That was a big drop, 85.26 to 81.07 on the 22nd. So some people might be like, "Oh yeah, I can get back. I can get back at Thursday's mark, so I'm going to get out." So see if it holds 81, then chance higher prices. I'm not chasing it here. If they decide this upgrade is just way overdone, you can. It's not even through yesterday's high. It's not even through 80.97 yet. I guess it ticked above it. So 81, big level there for Hyatt. And how are the other hotels doing? Hilton.
All been murdered. This
recession coming, right?
Yep, that's what it is. This is like the sell-off where nobody's ever going to take a trip again here, basically.
Yeah, look at.
they've been hit hard. Expedia
Carnival.
down. Look at Expedia, $112 6 days ago. It's 89 now, 92, bouncing this morning. Booking, same thing. Stock was $2,000 back on September the 15th. We are literally 10 days later, $1,669. It's a quiet little 15% fall or so. I guess not. I guess it's only an 8 or 9% fall, but $2,000 stock. But it's been ugly. Again, there's certain stocks that have just been hit harder than other ones. Recession stocks, these are not recession-proof stocks. I'll tell you that.
Right, and the reopening trade abruptly interrupted by higher interest rates. There it is. You see it.
Pandemic's over.
Yeah.
Well,
What a
apparently,
Dennis!
just everywhere except in this household, Mitch. The
Dennis,
pandemic is running rampant in this household.
Dennis, look at your Disney now. You said under triple digit.
I'm supposed to rebuy it.
Yeah.
90. Yeah. I'm gonna reload.
Oh, yeah.
Buy a little more 90. I'm getting it back at 90.
You think so?
I don't know if I'm gonna earn
that.
Going for 90.
You know why you might not get in it? Because that was a long one. That was a long trade. I don't think you.
It was supposed to be an investment.
It was.
That was a long-term investment for me, really. Actually, it was probably 4 months.
I
bought that just at the worst possible timing. Bought the buy. The sell was very good. The buy not so much.
We know when we're selling some
two sides
losers.
to every trade, though. There's two sides to every trade. If you screw one up, sometimes you don't have to screw up the other one.
We'll see if Disney maybe gets into video games or something. Follow Netflix, right?
I think Disney is going to be the player in metaverse. I think everybody's looking at Meta is going to be the meta in the playerverse. We've had this one absolutely right on the meta, saying I said it 2 weeks ago and started to break down through 160. I said I think this is the biggest value trap out there. It's 138. This stock rallies and then they immediately sell it again. This stock has just lost its way. Has no idea what they're doing now. They are getting TikTok to death. Legacy business is just not very interesting anymore. And then they're trying to reinvent themselves, and they're telling us they ain't going to have serious revenue from this till 2030. Have at it. That's what I mean. Who's that on Fast Money? Always says Dan. Is it Dan that says have at it? I'll say have at it on
I don't
Meta.
watch
You
it. I
want
don't
that
have
value?
a-
Have at it. I think the stock was under $100.
Okay, I'm just telling you that
Ouch.
don't shoot the messenger. But on Friday, when you were out and Mitch was lollygagging in New York, I had I co-hosted with Sean Udall. Okay, and Sean makes his picks and stuff, and
Don't-
he was pounding the table on Meta. And,
Oh man,
yeah,
that's
Sean
yeah.
is
just
such
shows
a
me
He
more and
was.
more.
I
I'm
don't.
close to the
Okay,
story.
okay.
He pounds the table on whatever's going down.
Yeah.
He's a
All right.
Yeah,
contrarian.
didn't
He's
he
probably
like
having a
snap?
good year.
Okay, just let me finish. And then and then at 9:00, I brought Gene on. And Dennis, you should. I asked him. I told him you were really worried about Apple and stuff, and he told you. I can't remember exactly what he said, but he told you not to worry. But then we wrapped it up, and Sean asked Gene. It was like, is there one really beaten down stock that 2, 3, 5, 7 years you're gonna say, yeah, man, I should have bought it. I should have bought it. And Gene said Meta. So I mean, right, wrong, or indifferent, I don't know. But
Well, I'll tell you, wrong. They've been wrong.
well,
200,
he
190,
he hasn't bought it
180,
yet. Or take
160, 150, 140. Price don't lie.
buy
Yeah,
the
I
dip,
mean,
baby.
Wasn't
Buy the
his
dip.
last pick Snap?
Who? I
Sean
can't
Udall.
keep track.
I remember. It was Snap, and so that's why I think he likes Meta also. But I don't know. I don't like any of these two.
Everybody likes Meta because it's trading like 15 times earnings, Mitch. And they're
Oh,
like,
that's why.
and they're on there and they're like, oh, there's so
value
much
trap.
value here, and it's going to eventually be the metaverse.
It's not the same company.
No, it's not the same. And the legacy businesses are under attack.
Advertising is under
business is under
attack too.
attack.
Hey, it's what makes. I didn't say I'm buying it. I'm just don't, like I said, don't shoot the messenger. I'm just telling you what he said. And then Dennis, when
Did you buy Meta?
I haven't. I might. I missed it. I missed it off the. I
I'm gonna wait
called
till
it off the
2029
IPO.
when they start to figure this out.
Another big concern for Meta is not only the side of the business that's changing, but their advertising business, right? If Netflix is going to come out with an ad tier, Disney's going to come out with an ad tier. Don't you think some of their advertising is going to go away from Meta to going towards
I do.
those
I
ad
think
tiers?
they're pivoting. I think that Zuck realized, the model that he had was not going to work over the longer course of time, and
He's getting
bit the
TikTok to
bullet.
death, and he's trying to figure something out.
Yeah. Yep. Figure it out. That's what he
All
did.
right,
All
And
right.
then he told us he ain't gonna be able to figure it out till 2030. I'm like,
Let's do
no, thank you.
one more rating here to fit one in CSX and Norfolk Southern. So here getting both UBS downgrading the duo, citing deteriorating
they're
macro
down.
backdrop.
Oh, wow.
So,
Thank you.
A little late to the party, maybe.
Yeah.
yeah,
Yep.
just joining the party.
Let's just
late.
watch the stock fall. CSX. Let's just watch the stock fall. 10, 7, 8 points from 30. Let's watch the stock fall 20% a month, and now we'll downgrade it. Thank you. Oh, you're a hero.
Well, they averted
Make a call, man. This is what drives me nuts about the analysts. So many lemmings, so many that just come out, chase price. They're getting paid all these big bucks, and they literally give us this. Come on. Who's making the call in August to sell when we're going up? Who was making the call?
Yeah, that's what
Figure
you
it
want to
out.
be seeing. That's what you want to be seeing with the analysts, though. But they chase those prices. I mean, let's just be honest. They chase them.
Christopher Marin coming in, trivia, and I don't know if this is true. What's the third largest search engine in the world? That's according to Christopher
YouTube.
Marin. Well, he says Meta, so I don't know.
Well, sure.
YouTube might be the second,
That
I think.
cash is there from somewhere. I mean, Meta's a huge company. We're not saying that he hasn't done a fantastic job to get to where he is. I'm saying those legacy businesses are under attack, and he knows it. And that's why he's trying to get ahead of it and trying to reinvent the company. It's why they renamed the company. But I'm going to say that if you're coming in there and buying it for the 15 or 16 PE, you're buying it based on those legacy businesses right now, because those new businesses are not, they're not
All right,
revenue generators, man.
I got to hop here. It's not been late getting over to Pre-Market Prep Plus.
Hop over there. I'll
Great
stick
being
around for
with
an extra 5 minutes here.
Yep. Okay.
And then we're going to send you
Great
over
job
to Joel.
today, guys. Okay, bye.
So, Joel's out of here, like
He's outta here.
lightning,
You like that,
He's
me
out
talking
of
trash
here.
about Meta. You know what, though? I mean, Mitch, you want to jump in and you got to look at the businesses and you can say, and especially when you're doing value investing and you're looking at multiples and you're analyzing, and you just jump and you say, P16, how do I go wrong? You got to take your head out of the box and look outside the box. And what is coming and attacking the box? Tick-tock, 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 tick-tock. What's happened to Snapchat? Tick-tock, 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 tick-tock. You know? I just look at that and I think, why is Facebook and Instagram not getting TikTok? Of course they are. He knows it. Zuckerberg knows it. Yeah, I think Meta is going to guide down again. I think Meta is going to not have a good quarter. I think Meta is in a world of hurt here. I just think a lot of people are going to keep coming in here and saying 15 times, 14 times earnings, how do I go wrong? If those earnings don't stay up, they can go wrong very quickly. So anyways, it's just my thoughts. It's just my opinion. I might be wrong. In trading, you can be wrong. It's allowed to be wrong. You just can't stay wrong. So, but at this point in time, I've been very right to not be long Meta.
On stocks like that, I would be looking at cheaper stocks that maybe can grow into a growth outlook versus a company that's trying to reestablish itself to a whole new business. I would look at like a Unity software for the long term versus
at least get something that's firing on all cylinders. I mean, tough. Here's a company that's trying to find its way again. And they have a lot of money and they probably will do it. They will probably figure it out. But they're telling me you're not going to have serious revenue this until 2030. As soon as he mentioned that, when was that? Like a year ago. The stock has been straight down ever since. Investors aren't sticking around here. We're not going to stick around for 8 years until you figure it out. And when you put it all together, I'm still going back to Disney. Who's better positioned to take advantage of the metaverse? Like you think about somebody was just saying, a Darth Vader experience in your living room. You put on your glasses or whatever it is, maybe it's going to be the Oculus, maybe it's going to be something completely different. But I'd pay right through Disney Plus, metaverse experiences. I mean, Disney is going to rock the metaverse. They are going to be one of those that are going to be the player in the metaverse. Disney is not an expensive stock either. Disney is going to be a victim of the recession, though. That's why it's why I lightened up in the last quarter. The business was still firing all cylinders, but I was predicting a recession. Disney gave us that nice lift from 90 to 120. You got to take advantage of that. Do I rebuy some at 90? I think so. I kept a small piece. I kept 1/6 of the original position just to keep my eye on it. But I think I would buy a little bit more at 90. I think if you're buying Disney at 98, 10 years from now, you're going to be very happy. 5 years from now, you're probably going to be happy. 2 years from now, I'm not sure because I think we're going to go into a nasty recession.
And my biggest thing would be in Meta is also, if you take a look at it, right? If the Oculus is their, prime time product that's going to take them back up there. Well, the truth is the competition is coming just as fast with glasses, right? You got Apple coming with glasses. You got all these companies starting to battle in the AR. By the time they get it right, they're going to have high competition all around them. So I just don't see that they're going to be able to keep the competitive advantage to maybe be the best in VR. We'll see what happens.
Meta and then platform. They might, Mitch. Maybe they do, but are you going to have a chance to get back in there again? I mean, us as traders, we're like, there's questions to be answered. But maybe they answer those questions, and maybe we'll get a chance to get back in. Do I have to be the hero and call the bottom on Meta, though? People have been trying to call the bottom on this since 200, and then it was 190, and then it was 180, and 170, and 160, and 150, and 136. I'm done trying to call the bottom. And stocks are making new lows. You got to go. There's no reason to be long this stock when it's breaking down and making new lows. It doesn't even have good relative strength. I mean, the stock market rallies yesterday, or at least, tries, not in the afternoon, but tried in the morning. Meta didn't really do much. I mean, it's right there closing on the lows again. So you get a rally today, and it's lifted by the ARBs, it's getting lifted up there. But then there's separation again. The stock just has nothing going on right now.
Last thing I'll give is 370 today on the SPY. I think you're going to maybe hold resistance there, so just be careful. I think we've gone up a pretty decent amount here already since yesterday's close. So watch out. We'll see what happens if we get through that 370. All right, that's going to do it for me.
People asking, why am I buying Disney at 98? Okay, I got to stop here. We got to listen to what I'm saying. I clearly said I wasn't buying Disney at 98. I clearly said 90. I'm pretty sure. Maybe my brain is not contemplating what is coming out of my lips. But I said, I think if you're buying at 98, I think 10 years from now, you're probably going to be happy. I'm not buying at 98. I might be buying at 90. I think we're going into a very bad recession. So Disney is not the stock I want to own. But I think they're going to be a big metaverse player. So I do want to own them at some point in time. But right now, if you're going into a recession, you absolutely don't want to own Disney. It's why I sold Disney back in August. Correctly sold Disney at 121, telling everyone on this show I was early. It went to 126, didn't get it all, went up another 5 points after that. But the reason I was selling all the stocks back in August, because I've been saying recession. Hey, that recession, it's still coming.
All right, team, we're going to wrap it on up. Have a great day, Dennis. We'll see you tomorrow like always, and you guys can keep up with Dennis Dick at Triple D Trader on Twitter, so definitely give him the follow. All right, we're going to wrap on up, bring you to live trading action. Now, I will let you guys know I'm going to let Ryan and Zunaid run the show today. I will be stepping out for a doctor's office visit, but I should be back. In the meantime, I should be back before the end of the show. I'll try to do my best. Like always, come on over to live trading action. Come check out some option trading from Zunaid. And then, of course, check out Ryan, checking out some of the smaller plays. He does a lot of these quick scalping types. So if you like that, come on over to live trading and check it on out.